market primitives. And excitingly enough, this is not happening on the EVM, but this is happening on Solana. So given that Solana, the whole ecosystem has taken a little bit of a backseat when it comes to attention over the past couple of months after most of the internet capital markets and the meme-con narratives have taken a backseat as well. I'll be very curious to see if this might help to bring the ecosystem back to the front and center of the industry. So thanks a lot for joining, Jesco. Great to have you on. Can you start by giving us a brief intro to you, your background, and how you ended up working in the space?
Thanks, Max. Super excited to be here. Yeah, maybe quick intro on my background. I co-founded the TUM Blockchain Club e.V., which is a German-based nonprofit organization like a DAO, which hosts an annual conference in Munich. And I also worked at Quantstamp and at Tangany, so crypto custodian. But I was always passionate about DeFi. I wrote a couple of master theses about it, and basically wanted to bring utility to smaller assets and help people diversify. And that's why I dropped out and now try to pioneer a new way to do DeFi lending to bring utility to all assets.
If you look at the current state of lending markets, what would you say are the existing issues and flaws and weaknesses? Maybe also in relation to some recent events. If we look at the stream collapse and the crunch of liquidity a couple of months ago or a few weeks ago with Resolve, I would say that everybody can agree that there are weaknesses in the current system, but how would you articulate and identify them, and how did that ultimately lead you to starting to work on Zodial?
So basically, we see risk being priced really differently still. So there's a range from a vault model like Morpho to a unified market, maybe something like Aave that's not completely unified. And we want to push in the direction of unified markets with the pairwise accuracy. So basically combining the best of both worlds. And yeah, there have been a couple of recent events that are basically setbacks, especially also in the Solana ecosystem with Drift recently being hacked. So there is some merit to having a vault still. But yeah, so from our perspective, we still believe that DeFi lending has the upper hand in like composability, which is possible only in lending compared to maybe a perps or DEX market. Yeah.
So what are the flaws of the current vault model, and what exactly makes Zodial different?
I think vaults are kind of primitive. They have like one risk parameter, one oracle, obviously just one point of failure. That's the benefit you still have. But what you really want is basically having a diverse portfolio, so you don't get liquidated all the time. And in those unified markets, like an Aave or maybe even a Camino that are partially unified, you basically can have multiple positions so that in case one position drops, you don't get liquidated, because if you only have a vault model, you can also trade perps. They have the same functionality, but they have higher safety barriers and more utility in terms of how much leverage you can expect to get out of it.
Can you walk us through the application a bit? Because I think that if you just hear it, it is very hard to imagine what is actually different under the hood.
Sure thing. Do you want to have like live demo right now, or should I just quickly speed up? Yeah, absolutely. Happy to share again. And so first of all, we have a challenge going on right now. So basically, to test our beta, which is getting audited at the moment, we give out a small grant, like $1,000 you can win if you have the best position. But what's basically possible in our market is that we have all kinds of assets like Solana, which is basically like Ethereum or staked Solana, but also RWAs like stocks and gold in one unified market. And you can go long and short any asset on the pool because we have a pairwise model between us. So in our philosophy page, we can see here any example, but let's stick to gold against Solana. We basically take a look at the historic data set like a curator would and go through the maximum divergence we can see on each pair and assign therefore our risk assessment. So we bring this vault-like pairwise accuracy to every use case that's out there. Even though it might not be used right now, we want to enable it so it can be used in the future, because right now the model is basically limiting those other use cases. And if you really want to, we can allow users to go long gold and short Solana, or the other way around, bringing utility and therefore interest to all of those kind of asset pairs. And in this case, we saw that gold was pumping while Solana was dumping. And this basically gave us the parameters we need to set. And now if we, for example, want to do this in our challenge, we can simply swap our USDC for some gold and then deposit it to get ranked on our leaderboard. And maybe let's not deposit everything. And quickly prove. This runs on a copy of mainnet, so you're not losing any real assets. And then if you want to, we can also take a borrow position. We just set Solana. Let's just borrow some Solana. We shouldn't be too aggressive here. Maybe just borrowing 50K so we don't get liquidated. This can obviously happen also in one loop. So let's wait until our position refreshes. And there we have it. We have our Solana now here. And we can swap this again into the asset we like. So let's swap the Solana again against our gold and deposit it back. So like looping on any other platform where we can now deposit this gold again and basically have any position that's out there possible in a unified market.
So if I compare that to, let's say, Camino or Jupiter Lend or some of the other lending markets in Solana, maybe not with gold and maybe not with all of these equities, but with all the crypto assets, I can do the same thing, just loop it up. So why would I use Zodial and not one of these established markets?
So basically on Camino, you have multiple markets. You have your main market, but this usually they try to push you into one of their smaller markets, for example, their stocks market. And then you suddenly have to manage your positions actively, first of all. And secondly, you also have to take multiple loops. And everyone knows in over-collateralized lending, multiple loops is killing your exposure and is introducing more risks. So for example, if you deposit your gold or stocks on the one market and you borrow USDC, go into the next market and deposit the USDC and borrow your Solana and try to loop this, it's really a pain. And every extra step brings extra costs, and we want to avoid this.
So do you have a quantitative comparison, like how much cheaper or like adjusted with the risk, how much cheaper it is than using other competitors?
So basically we can average, I mean, there's not a concrete scenario because we want to enable use cases that are currently not possible. So it's hard to compare if we go too drastic, like this example, for example. But on average, I think like the LTVs on those platforms are around 80 or 90%. So basically imagine multiplying this twice and then taking one step out is basically improvement. So it's like a 10% improvement, I would say. But this is like a lot bigger because it adds up over time. And like there's the other benefit of not needing to manage your positions actively. So if you don't trust your bot already with managing your positions on DeFi, then it's a great way to basically set and forget your positions on Zodial.
Unified markets have been tried before. Why would you say these previous attempts have failed, and what are you doing differently in the mechanism design that will ultimately lead to the success of Zodial?
Not all failed. I think Aave is still a great example, and they really push for it. Also, we see that unified markets tend to have better yields because they have more utility. Some of them failed obviously because of lack of security, and like you do need to have like a really high standard in the assets you support. And also they don't really can onboard new use cases. So I think like that's the main reason. If you want to enter a market and cannot support new use cases out of the box, it's super hard to get into the market.
On the asset selection side, you are obviously dealing with much more experimental ones. How does the pricing and the assessment of risk work, and how is it determined which asset will be added to the markets and under which conditions you can borrow against them?
Well, we will definitely listen to the community and the feedback we get during the beta. We right now want to support tokenized stocks and RWAs, mainly because we see new use cases with underlying yield that makes sense because they're more stable. They make more sense to loop. We can actually secure this on an Oracle basis. It's a standard practice by now, I think, NAV-like oracles that use underlying prices instead of the on-chain price, and therefore basically not having the risk that someone can overtake a small liquidity pool and pump the price so that he can drain those bigger assets.
Talking about RWAs, for example, how about commodities, and what about these yielding instruments like STRC or the tokenized and like crypto native equivalents of that, which would be APYX?
Yes, I mean, there's been great success on Camino also. I think they are leading the RWA chart with Prime on the Solana side. And they do make sense, especially given that their price cannot all of a sudden drop, so no one can be forced into liquidation. I think it's a great use case. We still need to evaluate because like our platform is mostly centered around the leveraged trading aspect of a portfolio, how this all plays. But like we definitely interested in those assets. Currently, they're not in our beta, but we will listen to everyone's feedback and see how it goes.
Since you mentioned the leverage looping aspect quite a bit, in what scenarios or for which types of positions would you say that Zodial is the way to go in an overall crypto portfolio? Think about some like very active investor, not necessarily professional, but on the pro tail side of things, wants to have some directional exposure to certain majors or like a few selected altcoins, probably mostly in the DeFi space. Maybe is very open to also bring some of his equity portfolio on chain over time, given that the tokenized versions there are only growing. So like, how would you determine for which of these positions and which of these use cases Zodial is a good fit?
So basically, we hope that we offer the most accurate market out there. So therefore, whenever we support the asset, obviously it should be a better fit. We cannot promise this at the beginning because obviously everyone starts out with a small subset. I mean, we see this with Aave V4 right now. They have like a really small pool of assets. So that's why we also want to focus more on those stable assets because we know that they're at least the impact of the price impact is not that great. So therefore we can offer better rates than on some more volatile crypto assets. And yeah, so right now I think at the beginning it should be mostly on those stabler assets sides, but we hope obviously to support everything in the future. Just a matter of quality and time.
So on your website, you mentioned that there will likely be fewer unnecessary liquidations. How do you optimize for that? And like, how does the solvency and the value of the portfolio of a user gets assessed in order to optimize to only liquidate when it's truly necessary?
Well, this is actually the most interesting part, I would say, but the most technical one. It's about capital flow. We want to push the liquidation at the very end. Obviously, we want to help users to diversify. And therefore, you can imagine this as like a flow problem because we now introduce like pairs to every asset pool you have in your position. And you have multiple positions on your deposit side. You may have multiple positions on your borrow side. You then cannot use just a simple heuristic and say like we average everything out like other protocols do. We want to give you the optimal so that we are as accurate as a pairwise model, but over your whole portfolio. And here, it's the interesting part and most technical part. We basically could not put this flow solver on chain during like a mass liquidation event. So we invented a ZK-like proof system that basically has an off-chain solver that puts out a witness. It's like a verification certificate that those are the two most optimal solutions that your portfolio has. And then you can borrow or do anything that's bad for the market. So basically you borrow or liquidate someone with that kind of proof on chain. So we only have to verify that whatever the flow calculator gave out is actually true on chain, and therefore can protect the market as well as the user and basically offer this optimality. And that's what's new. I think unified markets has been tried a lot of times, but this is what's basically enabling us to bring this accuracy to the unified market.
Why is Solana particularly useful and suitable for this specific market design?
There are more RWAs on Ethereum. I'm also an ETH guy, I used to be. We got a lot more support from the Solana community in the beginning. It was one of the main reasons. We also saw like a bigger gap in there. Camino is the dominant player in the lending market here. And they are really isolating in like the 30 different markets they have. So we saw a bigger opportunity here, a lower cost to switch because Solana users are not sticking around for that long usually. So there was like a couple of combinations we think were like a great opportunity for us to jump in. But we definitely would love to bring this also to Ethereum if it works out.
Are there any conditions under which it wouldn't work out on Ethereum?
No, Solana is right now cheaper and faster. But I mean, Ethereum also got a lot cheaper during our development time. So it's right now just on like focusing on something to ship like really well quality because like cannot do everything at once.
So since you're trying to evolve from the current vault and curator model, is there any role to play for curators on Zodial, or is everybody essentially completely responsible individually for their portfolio design?
For their portfolio, obviously you can build a vault model or like a hedge fund model on top of this, which is something we also thought about. It's a great role for curators to basically say, okay, we want to put these assets on there, or this portfolio has this return, and therefore you can deposit into this portfolio to get some yield. So this is definitely still an opportunity. And we also would love to partner, obviously, with one curator to basically prove that our risk assessment has been correct. But like from the just setting the parameters, I think it should be a more transparent way as it's done right now. But yeah, I'm still open to work with curators. I don't think it's necessary to set the parameters. It's more about like the individual risk that people are taking and portfolios that they are designing. That is the greatest opportunity, I believe.
And what is going to be the edge in terms of offering a better user experience right now and in the near future? Like, how are you trying to incentivize people to come over, given that the current curation model, it might be flawed, but it at least takes a little bit of work off your own shoulders, since you don't have to allocate into all of these markets individually. I mean, if you're really deep in the weeds, you can through, like, if you're looking at Morpho and you just use the Monarch front end, you can deploy to these markets individually. But especially if you're, you have a stable portion in your portfolio, you just want to deploy it across a diversified set of markets, you can either choose a vault on Morpho, or you can go one step further and use some other vault products, maybe like SummerFi, etc., some lending aggregator vaults that are, I think, offered by Gauntlet and many of the large curators. You can introduce duration by going to Infinify. So there are a lot of tools, and there has been a lot of progress made to make the UX and the allocation process more comfortable for users. So how are you trying to target people to come, use Zodial, and who's your target user group right now?
Sure. So on the target user group, even though a lot of people advise us to target institutions first, we still believe in the degens, or however you want to call it, the consumer investors, that they want to get the maximum utility out of their assets and pioneer this market. On the vault side, on like the native layer, so basically the protocol layer, like Camino has different vaults that allocate to their different markets the capital. We don't need this kind of infra. On the more broader side, if you want to allocate over different kind of protocols, there's Project Zero, which is like a prime broker on Solana. also want to partner with us, we're actually based on Project Zero right now and getting audited by the same team. So yeah, on that part, basically, if you don't want full exposure on us, I think you should probably go to them and then allocate over different protocols. But yeah, so we try to eliminate this unnecessary step in our opinion because we only have one pool, so you don't need to allocate USDC to multiple pools on our protocol. But obviously, if you want to spread your risk across multiple protocols, you should definitely look at every opportunity you have out there and see what works best for you.
What are the other protocols in the entire, let's say, DeFi and capital allocation stack in the Solana ecosystem that you're working together already or are planning to work with, and how are these synergies forming?
So the two main players are basically Camino, which has Fluid in the background, and Jupiter Land, which has Fluid in the background, and Camino. And there are some others. Drift recently got hacked, so I think they are out of the window. And Project Zero, it's also unified. The synergies we probably bring to Project Zero is basically that we can measure the volatility of those RWAs more accurately than they. So we can basically allow users of P0 to short and go long those different kind of correlated pairs better. And I mean, we have the same mission, so I hope this partnership comes to fruition. But yeah, that's basically there's like a DeFi carrot, I believe, which also got hit by the Drift protocol. So I think there will be very few players left to partner with, but maybe also a new need to bring some more innovation into that space.
Are you also already exploring the whole agentic commerce narrative? I mean, the whole ICM thing, when thought to its logical conclusion, would kind of be the internet and probably at that stage agent native way to allocate, shift capital around. Yet it feels like most of the agentic commerce, X-Pro2, MPP narratives have mostly been playing out on the EVM, particularly on Base. So does that already play a role for you? And if so, yeah, how are you positioning yourselves?
We've definitely tested it. I mean, Base has some great wallets and infra, which also works on Solana, actually. I think those are the two supported networks right now, not even the EVM main layer. But we see DeFi lending as the overconfidence in your own portfolio and your own ability to judge. And while like definitely there are some advantages still left compared to perps trading, I think if you want your agents to read the news and trade on your behalf, I think perps trading right now is the way simpler and safer bet, because DeFi lending is for the human more easy to understand. If I have the portfolio of having those 4 assets on my long exposure and those 2 or 3 assets on my short exposure, but on the new spot that's trading against USDC, maybe it's way simpler to just do one trade at a time and not on a holistic long-term vision on a portfolio.
Are you using AI to any extent in working on Zodial, maybe when trying to figure out optimal risk parameters or loan to value ratios, etc.?
This is really deterministic, so we don't plan on using AI on that part. We definitely use it like everyone else for coding, but I mean, our auditors will keep the code safe. And yeah, so basically we tried it out. We had our own bots trying to borrow and lend. It's actually already working on Project Zero, so shout out to them. I think they have like really good tech in the background. And if you want to try it out already live, you should probably try it out. But like, yeah, I'm not gonna advise more for them than I already did.
A few minutes ago, we already touched upon RWAs. So, of the things that you already have available on Zodial, how is the pricing determined? How are liquidations handled, given that it just introduces another layer of friction because you have a real world asset that you first have to bring on chain. So you are very dependent on how well and how smoothly the issuer can execute on integrating changes in prices through oracles, but also unwinding and redeeming these assets if necessary. Maybe related to that, I think a few days ago, Silo published their V3 announcement, where they innovated on the traditional being stuck in a market issue that we've had with a couple of instances over the past couple of months by being able to just take over the collateral. So how is Zodial positioned in these edge cases, and how do unwinds and liquidations work?
So basically right now we have more broader parameters for our assets that are not totally liquid. So for example, for tokenized stocks, there's a window of up to 92 hours where the live price is not present. So we use the underlying price at market close until the market repegs and the issuer is incentivized. We also support our liquidator with some capital so that he can take an unprofitable on-chain position to keep the market safe. And we basically bet on the fact that Kraken or Xtorch, which is behind backed finance, repegs the position when the market is opening. So to keep everything running smoothly as possible. On your point on how these parameters are set, then basically on those stocks, there's a longer window. So if you combine a stock with a crypto position, which is super liquid, you still get that longer window to keep the market safe. But it's still like, it should be the better option and it should be the more accurate option. And the moment the assets become more liquid and the on-chain price is trading like the real price, we can switch over to the on-chain price. But right now, we obviously want to protect the unified market, and this has higher priority than offering better parameters.
Do you also plan to, when talking about the whole DeFi and neobanking convergence, entrance of more traditional capital and kind of the industry getting absorbed more and more into the existing financial system, what primitives are you offering that also become useful for other fintechs or for traditional deployers that might use Zodial and the lending market primitives that you're introducing more as a backend or as a tool for their existing distribution and their existing front ends?
Yeah, I think we've seen this with more established players, obviously, that they will get absorbed and they have Morpho or Aave in the background and giving out then a smaller cut of that yield. So basically offering an SDK to those players and some compliance stack that they can trust, not just in the smart contract, but also in the company behind it, is like critical, but cannot be the first step into any market. So this is like on our go-to-market side, after onboarding the more crypto native users and then the maybe more institutional users, then finally bridging to those more TradFi companies to offer them better yields. Right now, the yields in crypto are kind of low, so it's hard to promise that. But it's obviously like a path everyone should take, and we would also love to take.
For which strategies that people are currently executing on Solana, maybe talking about the more professional and semi to institutional crowd, what can they already do on Zodial that they might not be able to do anywhere else?
So basically this cross-asset hedging, that you can short something that you might, I mean, not all protocols allow borrowing on assets, so you are kind of locked there. On Camino, for example, some of the stocks are locked that because there's some downside risk if you borrow this and bring too much volatility in one market, and especially cross-market hedging, so crypto against RWAs and so on, are points that people should use us for and where we see the most value to add to the users. So if you want to make this more concrete, again, like I hope that there will be all derivatives liquid enough soon. Then you can go long and short oil against gold, against euro, against whatever you want. And you don't have, for example, if you use us and we are more accurate on the euro side. You don't have that exposure against USD anymore, or you can also place some bets on the short side that are currently not possible.
You already hinted on the currently ongoing testnet campaign. How can people participate, and what are maybe some tips you would recommend people to employ to perform better in the competition?
Sure. So all you need, and we prefer you use a burner wallet, is to sign in. We use a copy of mainnet, so you don't really need real world assets. You get 100K in USDC and swap. And my main tip is basically have a stable enough position. You don't get liquidated, but try to get the maximum exposure, so the maximum volatility in, so that within those 3 weeks you actually have a strategy that's winning. So the top 3 in our leaderboard will get the prizes. And I would say probably diversify, so have more than one pair. You could also, in theory, have multiple wallets and multiple positions and just submit at the end the best submission. But what we want users to basically test out is what kind of asset combinations are the most winning. And if you think the war is going to end, maybe you should short gold. Or if you think that in the next 3 weeks, the euro will dump because it's right now overvalued compared to USD, you can also do this trade, which is like, because of the good parameters, you can have like way more exposure than on other platforms. And we basically set out the pools to be as liquid as possible. So there's interest will likely not play a big role. Maybe you bet on underlying yields. So you bet on that stake Solana will outperform the others over this small period with their 6%. I don't think so. I think there's more volatility in the asset pricing. You can also take all those bets combined, and that's the cool part. We can offer, I think, up to 16 different positions in one portfolio on the long side and the short side. So you should basically spread your risk. And if you're on the top half, every week you get an additional boost. So we want to encourage users to check in, maybe actively manage their positions. If you feel, you can also deploy a bot. I'm not sure if this already works. We have to check, but yeah. So we basically want users to explore what's now possible, what was not possible in the use case side. And we obviously have the benefit of then having more data on what our users actually want to trade and want to borrow, want to short.
Very nice. I think, yeah, there's something new to try out over on Solana. It's very great to see that the ecosystem is still growing and innovating on the current primitives. Are there any other topics that we haven't covered yet that you think we should definitely go into for people to further their understanding on lending markets in general and on Zodial?
I think the only topic left is basically on the risk side, how currently, I mean, maybe it's still way too different. Maybe let's do one final iteration on there. If you want to really understand what's so different, it's basically this one parameter that allows every pair compared to 2 parameters. So usually you see one parameter on the deposit side, your loan to value, but there's actually a hidden parameter on most markets on the borrower side. It's not that relevant right now because most people only borrow USDC, and this parameter is then set to 99 or 90%. So you don't feel the impact straight away, but this basically hinders all other use cases. So if you want to borrow something that's actually allowed to be borrowed, like something more risky, and you then get another parameter on top, which is like 60%, and you multiply both, you already are kind of hindered in that position. And we basically, if we see something is correlated, you can get more exposure than in traditional markets. And I think that's the really cool and exciting part, to allow for diverse portfolios, and that you hopefully will get liquidated less often and have just more utility to all your assets. So thank you so much for having me, Max. Super excited what we will ship in the future. And I hope to get a lot of feedback and a lot of you to test our beta and maybe win.
Where can people find you? Because we definitely want to link access to the beta, your Twitter, etc., in the podcast description.
So the challenge is live on Super Team Earn. You can also find us under Zodial.-XYZ on X, and you would also probably find me at any conference. So looking forward to speaking with every one of you. And we also have a support channel on Telegram. If you have any questions, reach out to us. Yeah.
Thanks a lot for coming on, Jesco. I think at the latest we'll see each other at the Solana Summit in June in Berlin throughout the Berlin Blockchain Week. So if you're either in Germany or close to Germany, I'd definitely recommend signing up there. And yeah, we'll make sure to put all the links into the description, and we'll encourage people to reach out, play around with Zodial, and yeah, hopefully take the chance on winning the $1,000.
Thank you.
Thanks a lot for coming on. Have a good one.